Hello Accounting 101 students. In this video, we will go over the required online participation end of chapter practice exercise, question number 3. Please remember, for this class, you want to make sure that you complete at least 4 out of the 6 end of chapter practice exercises with at least 90% accuracy for each question. And this is part of our class in our online environment. So I will be demonstrating question number 3. In question number 3, we start off with some data. And every student will have similar accounts, but the numbers in your problem will be different student to student. So in question number 3, we will be preparing an income statement, a retained earnings statement, and a balance sheet. So for the income statement, this is the first statement that a company would prepare, and this income statement is prepared for a period of time. So this company started on January 1st, 2017, and we're preparing the financial statements as of December 31st, 2017. And the income statement tells us about a company's revenues and expenses during that period of time. And the main goal is to arrive at the net income or net loss. So you will go up to the data and see which revenue accounts this company will have. In my example, this company has service revenue, and the amount is $29,600. For expenses, a company should start off with listing their largest expense for the purposes of WileyPlus. So we're going to look at what expenses the company has. I can see that the company has rent expense, advertising expense, and supplies expense. So I'm going to start off with my rent expense. Then I'm going to include in my advertising expense, and then the supplies expense. So you can go ahead and include the numbers that you have in your problem. And you will then need to have a subtotal for your total expenses. So this is where you're going to take out your calculator and add up all of your expenses together. So in my problem, I have $18,000 of expenses. And remember, your numbers might look different from the numbers I have here. And for the net income, we're going to take the total revenues minus the total expenses. So in my problem, I have $11,600. The second statement a company will prepare is the retained earnings statement. And the retained earnings statement is prepared for the same period of time. And the retained earnings tells us from the company's current year and prior year earnings, how much is retained in the company or kept within the company and not distributed. So we're going to start off with our retained earnings at the beginning of the year. And we want to compute our retained earnings at the end of the year. And because this is a brand new company, our retained earnings is going to start off with $0. We're going to add the current year's net income, which is the $11,600, coming from our income statement. So we're using the same number from the income statement as part of the retained earnings statement. Then you'll need to do a subtotal before you subtract out your dividends. And the number for the dividends is given in this problem. So you will go up to your data and include that number for the dividends. And then your last part is just to do the math. So I have $6,800 for my ending retained earnings. So this is the ending retained earnings on December 31st, 2017. When I start the next year, January 1st, 2018, my beginning retained earnings will be $6,800. So 1 year's ending is the next year's beginning. The third statement that we're going to complete is the balance sheet. And the balance sheet is prepared for a particular point in time. Our balance sheet starts off with the assets, which are the resources a company owns. And then we're going to list out the liabilities, the amounts owed to others, and the stockholders' equity, which represents the owner's claim to the business. For our assets, we need to include these in a particular order. And the order goes, how quickly can we convert an asset into cash? And this is referred to as liquidity. So the first asset I would expect to see for any company would be cash. So I'm going to include in my cash amount. And then you want to see what other assets a company has. In this example, this company has accounts receivable. Those are the amounts that the customer owe the company, and hopefully we should be receiving these amounts fairly soon, within a period of 30 days, maybe 60 days at the most, but within a year would be expected for accounts receivable. Then I'm going to look at my accounts, and I'm going to see that this company has supplies, and those supplies are expected to be used up in less than a year. So I'm going to list my supplies next. And the supplies are the resources that a company has access to, and they have not been used yet. The supplies expense represents the supplies that have already been used and consumed. So you'll remember from our income statement, we had supplies expense. Those are those supplies that we no longer have because we've used them up. And last, I'm going to list out equipment, because this equipment, I expect to use it for the long term. So I'm going to list my equipment last when it comes to my assets section. And I need to go ahead and add up my total assets. The next section that we have is our liability section. And in our liability section, we want to note the amounts that the company owes to others. So I see accounts payable and notes payable. The order liabilities go in is, when do we have to pay back the loan? The loan we have to pay back earlier should be listed first. Generally, a loan, when it's paid back, will be paid back at the beginning of the next period. If your loan is due 2 or 3 or 5 years from now, then you will not list that first, but you would list your accounts payable first. In this particular example, I will start off by listing the notes payable first. And then I will list our accounts payable. But in real life, it actually goes in the order that you have to pay back first. So I need to have a subtotal for my liabilities. And then I'm going to include my Stockholders Equity section. In my Stockholders Equity section, at this point in our beginning accounting class, we will have two things in our Stockholders Equity, which will include the common stock, which represents the amounts that the investors gave to the business. So the common stock in my example is $17,300. And the other item you would have in your Stockholders Equity section is retained earnings. And this is going to be our retained earnings at the end of the year because we're preparing our balance sheet as of December 31st, the last day of the year. And the amount for the retained earnings is going to be from our retained earnings statement. So we have to prepare the income statement in order to prepare the retained earnings statement in order to last prepare our balance sheet. And we want to have a subtotal for the total stockholders' equity. And at the very end, we want to add up our total liabilities and stockholder equity. So you want to go ahead and take some time to do all of the math. So I have $43,000 for my total assets. For my liabilities, I have $18,900. And for my equity, I have $24,100. And now I want to get to my total liabilities plus stockholders' equity. And once you add up the $18,900 and the $24,100, you're going to see that this is $43,000. And one important thing to note is that the total assets has to equal the total liabilities and equity in the balance sheet. Thank you for taking the time to watch this video.